Well, welcome to you all, and thank you for coming to the launch of Which Way Now? Economic Policy After a Decade of Upheaval. I'm Aaron Advani. I'm a Impact Director here at Warwick, at the Centre at Cage, and also an Assistant Professor here at the University of Warwick in the Economics Department. So before we get into the main event for tonight, I just want to take a couple of minutes to introduce you, for those of you who don't know, to Cage itself and to what we're doing. So Cage, which is more properly the Centre for Competitive Advantage in the Global Economy, is an ESRC-funded research centre based here at the University of Warwick. We have a large number of members from the Department of Economics here, also from other parts of the university, and we have affiliates all around the UK and indeed around the world. And a big part of what we do is to do world-leading academic research. But another part of what we want to do and what we are doing is to also convey that research in a way that can directly connect with policymakers and people who can then go and use that research for practical purposes outside the ivory tower. This policy report, produced in collaboration with our partners at the Social Market Foundation, is the fourth in a series of reports that we've done, bringing our research directly to a policy audience by kind of filtering the latest academic research and what we know into a format that's more accessible and more available for the public. And so tonight what we'll do is to bring out three of those pieces of research within the report. So the report contains a number of papers, and I urge you to go ahead and read them. They're all 5 to 6 pages long, so they're very accessible and easy to spend some time with. We'll bring out three of those pieces of research, and then we have three kind of important people from the perspective of policy and the sphere of practical economics who can talk about what we found, what we can say about policy, and to try and bring a bit of wider context to what we're doing tonight. So up first, what we'll have is we'll have Dennis Novi, and then I'll introduce the other speakers as we go along. Dennis.
All right, thanks. All right, okay. Good evening. Hello, everyone. Thanks for coming. It's great to be here. I'm going to talk for a few minutes about one of the chapters in the Cage report, which is on Brexit and inflation, as you can see there. And there's also some Twitter info down there in case you're keen on that, so please feel free. Hashtag which way now. Now, this chapter is based on a paper that I wrote with 3 co-authors, so I just want to mention them. The title of the paper formally is The Brexit Vote, Inflation and UK Living Standards, and these are my 3 co-authors, Holger Breinlich from the University of Surrey, Elsa Laroma from the London School of Economics, and Thomas Sampson also from the LSE. What we do in this paper is we try to think through the implications of the exchange rate depreciation during the night of the referendum. As most of you will probably remember, during the night, that is very early in the morning on June 24th, 2016, there were big movements in financial markets. When it became clear that actually the referendum went in favor of leave, not in favor of remain, the pound dropped very strongly in exchange rate markets. Within seconds, it dropped. And this is quite rare. You don't see this very much, certainly not with currencies that are so major like sterling. You might see that with some small currencies of very small countries, but certainly not with major markets that are very liquid. And the reason is simply that the result was unexpected, certainly unexpected from the point of view of financial markets, but also betting markets, and most of the polls were at best even or in favor of remain. And of course, that means there's likely a decreased expected future openness of the UK to trade, investment, immigration. Of course, we don't know the details yet, and there's also a lot of uncertainty about future economic policy. And what we want to do in this paper, focusing on consumer inflation, we don't want to predict anything about what we think may or may not happen. We want to look at the past years and think what has happened already. So here you can see the drop of the pound early in the morning on June 24th, 2016. The red line is against the US dollar, the green line is against the euro. And as I said earlier, this is very unusual in exchange rate markets. And also what's interesting about this particular depreciation is that it persisted. Exchange rate markets go up and down all the time, but this was a shock that was best described as permanent. The pound did not recover, and as you probably all know, the pound is still around 130 against the dollar, which is pretty much the level to which it dropped during the night of the referendum. Inflation started picking up soon after. You can see that prior to the referendum in 2015, for example, inflation was around 0%, even negative technically, and still very, very low by historical standards, about 0.5% in the month of the referendum. But then there was an increase to over 2%. And at the same time, real wages dropped because nominal wages, the nominal amount of money you get paid, didn't change. And since consumer prices went up, it meant purchasing power of people went down. And you actually had a decline of real wages, which doesn't happen that much, actually, except for times of recession. And the reason for that is, as I will say, related very much to international trade. And you can also see that it's not something that happened in general in other countries in the rest of the world. It's quite specific to the UK economy. Here's the general price index. This is some average price of the things you buy. And you can see that everything was, in this picture, normalized to exactly the same level during the time of the referendum. Then prices went up much faster in the UK, that's the blue line, compared to the United States, that's in green, or the Eurozone, which is in red. So clearly something is going on that led to a higher increase, a faster increase in prices in the UK. And the reason this happened is because this depreciation of the pound impacts the prices of imported goods. So for example, fruit and vegetable. These are things we buy, especially in wintertime, that are imported from foreign countries, or textiles. If you think about the clothes that you're wearing right now, most likely they were imported from foreign countries, furniture and so on and so on. A lot of these things are imported. And here you can see some numbers along those lines across different industries. For example, food and non-alcoholic beverages, this top line, 50% of all the expenditure in the UK on those things is directly related to imported goods. So these come from abroad. Clothing and footwear is even higher, 88%. But there are other industries or areas of spending where it's very close to zero. For example, restaurants and hotels, almost by definition, is a local business, and therefore the direct share is zero. But also education is essentially zero. Health spending isn't imported very much. And that's precisely the variation that we use in the paper to trace down that mechanism. I'm not going to bore you with the details, but that's what we look at in the data. And these are the same data that the Office for National Statistics used to compute the official consumer price index. And these data are publicly available, and we have made all our calculations available as well. So anyone can look at the details. And one very simple check of what's going on is if you just look at these different categories and split them into low versus half. You cut them in the middle and look at the things that don't really depend on imports very much, like education and health, and other ones that do, like clothing. You can see a big difference. Nothing happened to the low import category that was around zero both before and after the referendum, but for high import exposure, you can see this big increase. It happened relatively quickly. Prices started picking up in the second half of 2016 already, and certainly by 2017 they were higher. And the inflation rate for those goods was actually about 5% or so during that time. What does this mean in practice for the average household? Well, we find that just looking at this referendum effect, the Brexit vote increased inflation by 1.7 percentage points. And when I say Brexit vote, I mean the surprising outcome, at least surprising in the view of financial markets. By comparison, the inflation rate, this is all to June 2017. The inflation rate over that same time period from June 16 to 17 went up from 0.5 to 2.6%. So that's a gap of 2.1 percentage points. And 1.7 of that is directly because of that. Of course, the Brexit vote is not the only reason. There might be other reasons why prices change, oil prices or global cost pressures and so on, but that's all filtered out. We exclusively focus here on the link that can be made to the Brexit vote. That means for the average household, it's about £400 more per year of higher expenditure just to buy exactly the same things as before. That's about 1 week's wages, and it's a permanent cost. It's not that this is a one-off and 1 year and then the year after that you don't have to pay this anymore. It's a permanent increase in prices that you will have to pay, all else being equal, for all the time, for years to come. In total, if you add it up, I think there's about 27 million households in the UK. If you if you add up all these households, the spending is about 11 billion pounds or 210 million per week, if you remember the red buzz with the slogan 350 million pounds. Well, it's not quite the same, it's 210 million, but with the opposite sign. So it's money that we spend, not money that we somehow don't have to spend by giving it to the European Union. There's not much difference across different incomes. So here we have the group of the richest households versus the group of the poorest households, and the benchmark, it's 0 here, is 1.7% percentage points increase in inflation. There's almost no deviation. The deviations are really small. So it's not that rich households were affected less or more compared to poor households. It's all across the board by roughly the same. However, across regions in the UK, you do see some differences. Here you have London, and again, the benchmark is 1.7 percentage points. In London, the increase was lower. It would have only been 1.35 percentage points. In Wales, Scotland, Northern Ireland, here on the right-hand side, the inflation increase would have been much higher. And the simple reason is that consumption baskets are different. In London, people pay a much higher fraction of their income on domestically produced goods and services. Rent, for example, we all know that housing costs are very high in London. Therefore, households in London tend to spend much more on that. Whereas in Northern Ireland, Wales, and so on, the shares of expenditure on things like food and clothing are much higher, and therefore those regions of the UK have been more exposed.
Excuse me.
So I think I'm going to stop here. Perhaps last thing to say, why does this matter for policy? Well, clearly it's about inflation, therefore important for the Bank of England. They need to take that information into account because they need to set interest rates in order to control inflation. But also has implications for the government in general, because spending power has decreased. And also for businesses, I haven't said a single thing about business here. For businesses, there's also been an increase in the costs because they import a lot of intermediate inputs that they use. For example, here locally in the car industry, they very much depend on intermediate inputs for cars. And those costs have also gone up. Thank you.
And now we'll hand over to Liam Halligan, who's a journalist and columnist at The Telegraph, to respond.
Thank you very much. Well, this feels like coming home for me. I always feel a bit of an imposter at university events, but I guess I shouldn't here. I'm a graduate of Warwick's economics department. I see people in the audience who taught me over many years, and it's very nice to see them. Forgive me. I'm also on the advisory board of Cage. I'm very proud of that. I've been on the advisory board for quite a few years now, pretty much since Cage began and through the refunding, and I'd like to use this public opportunity to pay tribute to Jane and Fiona, and indeed Nick Crafts, of course, and everyone else at Cage. I think it's a fantastic centre. Warwick over the years has had a real reputation, certainly when I was here in the late 80s, for very crunchy economics. A lot of the econometric techniques used around the world were pioneered and developed here. But also, I think as economics has become a lot more interdisciplinary in recent years, Warwick has really moved with the times, and Cage is grounded in robust academic economics, but it's a place where there's a lot of practical economics going on and a lot of cross-fertilization between the various disciplines, and it's great to be associated with that. It's nice also to see the SMF involved. I helped set up the SMF with a professor of Warwick, Robert Skidelsky, so that I feel this is a real homecoming for me. So I was interested to see Dennis's numbers. I guess all I'd do for the students in the room is to just put out a few other thoughts that you might want to bear in mind to consider alongside the evidence that you've just heard. I mean, I write a newspaper column every week in the Sunday Telegraph and many other places, and I remember writing at the beginning of 2016, I remember an IMF report said that sterling was 20% overvalued at the end of 2016. Also, I spent all night of the referendum results in a studio at LBC calling the exchange rate for the nation literally looking at a Bloomberg screen and talking live on the radio about what was happening to the exchange rate. And the exchange rate did fall very heavily. That's because there was an awful lot of so-called smart money that thought it was slam dunk that Remain was going to win. So a lot of what you saw on the night was shock as people who had bet heavily on a result that they thought was certain being proved wrong. And the key point, future historians will show, and I've written about this quite a lot, was when Sunderland voted, when the result for Sunderland came in, because Sunderland is always an early result that's called in any election in the UK, and the conventional wisdom was that Sunderland would vote Remain strongly, not least because of the Nissan car plant, and then when it didn't, it became clear quite quickly to those of us who were watching closely that Leave was probably going to win. So you had an awful lot of unwinding positions, heavily leveraged positions, people borrowing to invest in what was seen as a surefire bet, and that helped to the exchange rate to fall quite heavily. And it's also worth saying that some of that exchange rate unwind was predicated on economic forecasts that turned out to not be correct, and they were very incorrect in both order and magnitude. So the Treasury said before the Leave vote that any Leave vote would lead to, in Q3 of 2016, a full 1% fall in GDP in that quarter, which is very unusual, and then a 0.4% fall in the following quarter. The actual outturn was plus 0.6% growth in both those quarters. But Dennis is completely right, of course. The exchange rate fall has stuck. I think that's partly, and that's led to higher UK inflation than in either the Eurozone or the US. I think if you look at the big macro picture, that's partly because the Eurozone's been suffering from deflation and the ECB's been creating virtual balances like crazy in order to try and reflate the Eurozone economy, to try and get some inflation. So of course UK inflation has been higher than Eurozone inflation. The scale of the ECB QE, if you like, because it's not really written about very much in the English language, seems to pass us by. But the ECB has added to its balance sheet so much in recent years that the ECB's balance sheet, ladies and gentlemen, is now bigger than the Federal Reserve's balance sheet, even though the US economy is 25% bigger than the Eurozone economy. So, and still, I would say that the fact that UK inflation has been higher than Eurozone inflation is a good thing, given that the Eurozone has been suffering from deflation. And of course, the US has had dollar appreciation as concerns about the Eurozone and concerns about the UK and concerns about China as the balance sheets of some of China's impaired banking system become clear, has led to a so-called flight to the dollar, which has seen the dollar appreciate, which of course has acted as an anti-inflationary crutch in the US. So it doesn't surprise me particularly that the UK's had higher inflation than the Eurozone and the US. It's a very interesting result that I take very seriously, that Dennis has teased out, as economists do, isolated one particular impact, and he's come up with a number that does look very credible to me, that inflation rose 1.7 percentage points between June 2016 and June 2017 because of the exchange rate depreciation. That's an important result, and that's obviously the downside of an exchange rate depreciation. The upside, some people would say, is that quite a lot of our manufacturing sector has become a bit more competitive, despite the absolute uncertainty that's been caused by the Brexit shenanigans. We have had every single month since the referendum result, portrayed as a calamity, of course. The PMI index for manufacturing in this country has been above 50, which is a record. And of course, there have been some living standard impacts of that higher inflation in the UK. On the other hand, unemployment has fallen to a 44-year low. So that's the other side of the exchange rate depreciation. Maybe it's helped to preserve some jobs. Inflation now in this country is at a 2-year low. So it's at 2.1. So, which is, as all the students in the room know, very close to the Bank of England's target. So while the exchange rate depreciation against the dollar, a lot of the presentation was about sterling dollar, and of course the dollar's on a tear because the US has been raising interest rates 9 times since the financial crisis. It's the only major economy in the world that's actually turned the interest rate cycle. Depends if you consider Russia to be a major economy, but we'll put that to one side. So that's another reason why the dollar has been appreciating, ergo headline dollar sterling has been depreciating from our point of view, and that's the one we tend to hear about on the tea time news. But even though the exchange rate depreciation on that basis has been sticky, inflation itself is now at a 2-year low. So there seems to be some disconnect there between the exchange rate and inflation. The last thing I'd say, ladies and gentlemen, as well as reiterating how good it is to be here, is that in 2018, even though we have had higher inflation in the UK was voted by Forbes magazine the #1 destination in the world to do business, and it achieved venture capital inflows in that year 70% higher than either France or Germany. Thank you.
So lots of great issues raised there that I'm sure will be touched on in the questions. And so part of what the report is doing is, of course, talking about some of the upheaval we've faced over the last 10 years, including the impact of the Brexit vote. But another big part of what we're doing is looking beyond that and saying, whatever happens over the next few months in terms of the path of Brexit, what are the other challenges a government will face? What are the other policies that we need to have? And what else do we need to do? So in one of the areas then to think about, we now discussed by Professor Vera Tröger, specifically the issue of maternity pay and what that means for women's role in the labour market. Thank you.
Thank you. Good evening, everybody. Thank you all very much for coming. I will talk about one of the contributions to the policy report, but let me take just one little minute of the 7 minutes I have to thank everybody who was involved in creating this policy report. So I myself was lucky enough to help as being the editor of this policy report, but there was a lot of work involved, and so I just want to thank especially Nick and Diana, who helped a lot with the production, and Jane and Gaynor and Fiona, because it has been quite some work. Thank you so much. I want to talk a little bit about one of the pieces I contributed to the policy report with my co-author Maria Elisa Epifanio. This is a large-scale project, and I try to synthesize what we are trying to do here. So we are trying to basically answer a very simple but hard and complicated to answer question, and that is, does the generosity of maternity benefit actually influence women standing in the labor market, their career outcomes, and potentially even their productivity? And so what we are trying to do here is take a first step at this by looking at women in academia, mothers in academia. So there has been basically a pattern across all the literature that has been dealing with this issue, mostly cross-sectionally, so comparing maternity benefits, legal entitlements to maternity benefits across countries. And what we can see here is basically that we find a trade-off between the generosity of maternity benefits and the length of maternity leave. So we are just looking here at one simple outcome, and that's the gender pay gap, the unconditional gender pay gap. And what we see is that more countries that have more generous legal maternity entitlements, so have a higher salary replacement rate, also have a smaller gender pay gap. And on the other hand, countries that have specifically very long maternity leaves have larger gender pay gaps. And that's, at least it is argued, that's basically due to women's attachment to the labor market and their reduced earnings capacity when they stay away from the labor market for too long. When we look again in comparison about what the legal entitlements in the UK are, then we can see the little red bar right to the right, that the generosity of legal entitlements in the UK are very low in comparison, right? So the replacement rate or the full-week equivalent salary replacement is, in comparison, very low. It's only undercut by one other country in the European Union, and that's Ireland. But everybody else is actually providing more generous benefits. So that, of course, leads, especially in the UK, to the effect that a lot of companies and also higher education institutions actually top this up by so-called occupational maternity benefits. And these occupational maternity benefits vary greatly across institutions and companies. And from a research perspective, that is great, because we can actually use this variation in these offerings and extract potential effects on outcomes for mothers. So when we look at women in academia, then what has been observed throughout the literature is, of course, that women are underrepresented. For example, in our department, we have 10% female full professors, which is probably very representative for the economics profession. But across most disciplines, especially in the social sciences and natural sciences, women are underrepresented, especially when they go or when you want to move higher up the career ladder. And that also holds true for salaries, that holds true for output and productivity. But what is also true is that female academics have lower fertility rates and higher rates of family dissolution. Whereas for male academics, that doesn't seem to make a difference, or sometimes having a family even has positive effects on career path, career speed, and outcomes. So therefore, UK higher education seems to be a really unique case to study this, because on the one hand, we have this great variation in maternity benefits across higher education institutions. And on the other hand, we can actually measure outcomes very straightforwardly in academia. So we can measure how fast somebody climbs up the career ladder, how fast somebody is promoted from lecturer to senior lecturer to full professor, or on the other hand, how much, of course, people earn, we can ask them, but also in academia, we can measure productivity directly, right? You might think it might not be a very good measure, but we can actually look at how much people produce in terms of publications and other types of academic outputs. So we are using this kind of variation, and we want to find out whether there is a relationship between the generosity of the occupational maternity benefits granted by different universities and outcomes. And this is just a quick snapshot. We collected all the data on occupational maternity benefits in all universities in the UK. And what you can see here is what we call generosity. So it's just a simple number. How many weeks of full salary replacement is a mother granted after the birth of a child? And you can see that there's huge variation across universities from 0 weeks, which means it's just implemented statutory benefits, and 26 weeks, so 6 months of full salary replacement. And I thought 26 weeks is really high. But when you look at companies, for example, in the UK, for example, especially manufacturing, so Jaguar, Land Rover, Nissan, BMW, they actually grant up to 12 months full salary replacement for maternity benefits. So we were a bit surprised when we saw that there's so much variation. So we are asking 2 questions. So what can we explain this variation? So do universities have specific incentives for granting more or less maternity leave? And the other question is, does this actually make a difference for outcomes? And just very quickly, what we find in the first paper we've written on this is that actually, there are specific university characteristics that help to explain why universities implement very different maternity benefits. So one is research intensity, right? And this probably can be explained with the potential ability to retain highly productive female staff. The other is costs, of course, because so we just measure here, for example, student to staff ratio. How costly is it to replace somebody who goes on maternity leave? And on the other hand, we have the bargaining power, so to say, of female academics. So the question of how many or what's the percentage of full professors that can actually lobby for better maternity benefits. Outcomes. Outcomes is, of course, what we are all interested in, right? So first we had a stab at general outcomes in an aggregate view. And what we can see here is really that those places that actually grant better maternity benefits have subsequently a higher share of full professors. So women actually move up to becoming full professors. And this really depends on, again, the research intensity of the university on the one hand, but also a lot of other institutional characteristics, like whether there is institutional childcare provided. But of course, you will all tell me, yeah, but you cannot really say anything at the aggregate level, and we might have ecological fallacy and all these kind of problems. So what we did is we collected very rich data at the individual level to tease out whether actually the generosity has an effect on outcomes. And what we find is when we compare very similar women with very similar research backgrounds at very similar universities, that if you are granted a larger number of weeks with full salary replacement, this will have effects on career speed, for example, but what I'm showing here, it has effects on final outcomes such as salaries, right? So what you can see here, when you move from a university that has a very low generosity to one that has high generosity, that makes approximately a difference of 15K in final salaries. And that's kind of huge if you think about what the distribution of salaries for female academics is. It's between 35 mostly. So the mass is between 35,000 and 65,000 pounds a year. So that makes a huge difference. So there's much more to do, clearly, but we think it is important to study this because, the UK is, as I showed before, very low in terms of legal entitlements, right? So that means that policy at the moment is outsourcing or externalizing the cost for childbearing to companies, institutions, and parents, and also the cost for early childhood education, mostly to parents, right? So there is room for improvement, and if we know that it makes a difference, then if we have the right kind of mix of generosity and length, this might actually help to keep female talent in the labor market, to allow easier career progression, and in the end help, achieve these outcomes that we are all interested in. So a smaller pay gap, especially at the high end, and potentially in the end also increase productivity. Thank you very much.
And now we'll have Vicky Price to respond.
Thank you very much. Everyone started by talking about the connections with Warwick. I have to admit I'm an LSE person through and through, although I have lots of connections. One of them actually is just there, Marcus Miller, who was my long-suffering tutor at the LSE before he jumped ship, and you can tell why, because obviously I was quite a handful. But we used Warwick a lot when I was joint head of the Government Economic Service. This is where we actually had our annual conferences, and I now, for my sins, teach at Warwick London at the summer school. Marcus actually and I do an actual module on money and banking and Europe and so on. So the connections are there. So I feel as if I'm sort of entitled to be here, if you like. So.
Cool.
But in terms of what we just heard, I think that's been, for me, an incredibly useful piece of additional research. I have written on women. I've written a book called Why Women Need Quotas, and I'm doing another book on women. So this is a fantastically useful addition to the information that's out there. It's not very surprising, though, I have to say. There is no doubt that taking time off and not coming back for quite some time actually has huge implications for women's career prospects. And actually, the more national data and international data suggests that once you do that, you never recover the path, on average, okay? There are some exceptions. You never recover the path that you were on before in terms of salary. And it also accounts for quite a lot of the pay gap. But I have sort of personal experience of that, if you like. Now, one of my daughters, after having child number 2, rang me up and said, "Oh, Mummy, I really like being with little," I'm not going to say who it is, because if she hears this, she knows it's her, a child whose name was whatever. "I really like it so much, I'm not going to go back, I think, and perhaps we can do something together in business." And I screamed down the line, well, on my mobile, "You're going back to work straight away. Have you not read my book?" So she went back, particularly since she was a civil servant, still is. Where, of course, you do get those maternity benefits. And the most important thing about being a civil servant, by comparison to everything I had experienced in the private sector, then I went to the civil service, where it was infinitely better, is that you also get trained and promoted while you're away. So right now she's had child number 3, and she's already being encouraged to apply, just started maternity pay, it was just last week that she produced, to actually apply for promotion while she's away. So what tends to happen, and the Institute for Fiscal Studies has produced quite a lot of data on this as well, is that absence means you, apart from the fact you don't get seen, also means you just lose the accumulation of skills that you absolutely need in terms of ensuring that you stay on a career path and get the salary that you deserve. It's the skills while you're working, work experience, and also the training that may be happening that others get and you don't get. And if you take quite some time off and come back, again, the national evidence and international evidence suggests that you invariably go back as a woman to work one skill level below the one you had, at least one, if not 2 or more. Particularly, of course, if you work part-time, which many women start doing, they get discouraged because there isn't very much that's available wherever they work. And of course, now with flexibility increasing, that might be easier. But generally, you very often come back part-time. If there was free childcare, that would be, or subsidized, that would be very different. And in fact, there is evidence from other countries that where there is a local authority provided, just was one example, there was one very good study in Italy, actually then corroborated by loads of other studies that took place, which I have used in my work. It showed that the chances of women then working full-time and then the implications of that on the pay gap increased very considerably. So cheap and easily available childcare, and flexible, actually, which it has to be. So the hours kids stay in there have to be taking some account of what happens to the work patterns of the parents is absolutely essential. And of course, the part-time job is really quite a worry itself, because even, let's assume you are back at your skill level, maybe. But the overall gap in pay between a woman's part-time, actually they get paid slightly better than men part-time, because it's only a very small percentage of men that do part-time work, and usually later in their lives, and they're prepared to do it for not very much. But anyway, it's changing with the gig economy, but these are still the overall figures. The pay gap between a part-time woman's hour pay and a full-time man's hour pay is 37%. I mean, that's large. And also, of course, what happens if that's what you do, you go and work below your skill level and so on, is that the chances of actually reaching top positions is very, very small. So the evidence is out there that provision of maternity benefits, and also, if you add to that, childcare, and a change of attitude to women so that you can keep them because of the talent that they represent, could actually make, quite a big difference to if that is changed, to what happens in the economy overall and productivity in the economy. So the link is very, very clear. But you hear so many stories, of course, of things going terribly wrong. But it's interesting what we heard about academia, because it just adds an extra piece of evidence. But I'm an economist, and all the research that I have read about economists in academia is that actually that profession, that discipline, has the worst representation of women in senior positions. Warwick is obviously an exception, from what we heard. And I'm delighted, therefore, to be here in a place where women are clearly doing considerably better. But it is a loss to the economy if that isn't across all sectors looked at. So my recommendation in my book, and which I really still feel very strongly about, is that institutions and firms have to be forced to have a certain percentage of women in senior positions over a period of time. And just by being forced to have that over a period of time makes them change the culture and the attitude to women. And one of those is maternity pay and length of maternity leave. So I welcome this report hugely and will use it quite a bit. Thank you.
And finally, in terms of report chapters, we'll hear from Dr. Goldenblather talking about another aspect of the labour market, and in particular thinking about the mismatch in terms of skills and in terms of geographic placement of individuals relative to where the work is.
Great. Thank you very much for having me here. It's really a pleasure. Thank you for organizing all this, because I think it's very important to kind of drag us out of our bubble and try to expose us to people who are going to discuss our work. So thank you for this opportunity, and thanks for coming. That's not my slide, is it? Here we go. So I'm going to talk to you about mismatched employment. Okay, so that sounds horribly boring. We talked about Brexit, we talked about gender gaps, and now we're talking about mismatch. Sorry about that. So that's roughly based on two pieces of work. Well, mostly the one with Joanna, who is at UPenn, and Thijs, our colleague, for a second chapter where we did somehow a literature review about mismatch. I'm mostly going to talk about the first piece. Just to motivate, things a little bit. So these are two graphs that, look quite nice. So on the left, you've got the UK. On the right, you've got the EU. On the x-axis, what do you have? The unemployment rate. On the y-axis, what do you have? The job vacancy rate. So how many jobs there are around that needs to be filled and couldn't find someone. The darker dots are actually earlier in the past. So it starts around 2003 for the UK. It starts around 2005 for EU on the right-hand side. Basically, what you see is that something happened. We don't exactly know why in 2008. I'm kidding. So things are going straight down and to the east. So somehow you got, at the same time, not much jobs around. So, obviously vacancies become scarce. And also, at the same time, unemployment goes high. And then what's going on? Well, times go better, and then things start to recover. And you see at the UK is pretty much back up there already on the top. So in a situation in which unemployment rate is actually quite lower and vacancy rate is actually quite higher. On the EU, you see that things are slightly more complicated. That is that at the same time you reach a moment during which, well, we've got quite a lot of vacancies around, but still quite a large number of unemployed people looking for jobs. So at the same time, and it's the same for the UK if you want. During the recovery period, you got much more jobs around, and still these jobs couldn't find unemployed people to fill them. And so that there was this problem, and we don't know why we didn't go back exactly on the same track as the situation as when the situation deteriorated. So we've got this problem, and actually, it's more fundamental than that. I mean, the question is really why are there at the same time people that look for jobs and employers that look for employees unsuccessfully? And I think that motivates the question. Well, maybe one hypothesis for that is that, well, maybe there is mismatch. So what do we mean by mismatch? Well, we mean two things. We mean geography. We mean maybe there are some areas that are absolutely great in terms of jobs, but there is just no one to fill these jobs. And maybe areas that are actually exactly the other way around. Lots of people around that would like jobs, but actually no jobs. That's geography. And then you've got skills. Maybe, the problem is that employers, they really want some skills. And unfortunately, these skills are not around. Okay, so you have these two dimensions, occupation or skills, if you want, on the one hand, and geography on the other. One thing that needs to be considered carefully when you want to measure the extent to which mismatch creates unemployment is really how you're going to define what a local labor market is. What I mean by that is that at some point, when you want to measure mismatch, what you're going to do is I'm going to say, okay, I'm going to work on different cities, and I'm going to assume these cities are nice little islands, and I'm just going to consider people can actually work, search in the cities, but not outside of their cities. And then the exercise is basically, okay, what if I could move people around the cities? How much could I improve the situation in terms of unemployment? And that's the exercise that the literature is doing in terms of measuring mismatch. The problem is that it's a very inaccurate way to represent the labor market. Local labor markets are all intricated with each other. People can move to the north, to the south, except they don't like very much to do it. So one thing that we've done, we've basically tried to document first what's going on in terms of the probability to apply as a function of distance. This is made on US data, and I apologize for that, but I didn't have the same data for the UK. So basically what happens and what you want to look for is what is the relative probability of application. So you apply more if something is really next door, and how fast does it go down when distance increases. Okay, and what you see is that, well, it actually decreases pretty fast, okay? But then on the other hand, the thing is that the number of jobs that are 10 miles away or 20 miles away also increases. So, and you still have a non-zero probability to apply at, say, 100 miles or 200 miles. So all in all, I mean, people definitely prefer to stay close, but they also are ready to apply slightly far away. So it's not accurate to assume that people search, say, everywhere in the West Midlands, but it's not accurate either to say that they're never going to apply to Scotland or to London. So how do you do with that? Well, what you can do is to try to use the data you have, to try to take into account the fact that it's not little boxes or islands that you have, but actually everything is intricate. That's pretty much what we did in this paper with Joanna. And actually at the end of the day, when you take that into account, when you take into account the fact that everything is intricate, what you see is that the contribution of geographic mismatch to unemployment is actually quite marginal. Something like a maximum, because you always have upper bound in this particular kind of exercise, of something like 5%. And when I say 5%, obviously I don't say percentage points, I say percent. So that means, for instance, going from 8% to 7.6% if you were able to erase totally the problem of geographic mismatch. That's not negligible, that's not nothing, but remember it's an upper bound. So it means if you could put all the trains in the world to actually make distance completely irrelevant, you would go down there. Okay? What about skill mismatch? Well, more complicated, haven't done yet, but probably more important. The first thing we've done so far suggests is it would be slightly higher, but not terribly higher either. So in a nutshell, mismatch is important. It's not like the maximum thing that you can think about. It's not going to explain the whole unemployment, certainly not. To finish with, I would like to mention something on the other chapter, which with Thijs, and on which we try to review basically what's going on and why, at the end of the day, mismatch persists. What is the problem? Well, it could be because job seekers are not mobile enough. It could be because employers are not mobile enough. Or it could be because wages are set in a very strange way, so that, in some areas, maybe it's the bargaining is such that the workers get all the surplus, and in others, employers get all the surplus. So they never have the incentive to actually be in the same place. What basically this paper does, and that's not by me, it's by Thijs and a co-author, basically the latest evidence is that it has mostly to do with the first two, okay? And that's probably the mobility of job seekers and employers is an issue to some extent. I have to say that, so the basic message is that mismatch, well, it's an issue, it's not the major issue, and still, if we wanted to work on that, we should work on the mobility of job seekers and employers. Thank you very much.
And finally, we'll hand over to Dr. Gemma Tetlow, who's Chief Economist at the Institute for Government, to respond to that and to draw us out to the kind of wider issues that the report raises.
Thanks very much. So I don't know if it was by design or accident, but I too was a Warwick Economics Department graduate, a bit more recently than Liam, so I definitely also recognise some faces in the audience.
She comes out fighting.
So I wanted to start before commenting on the specific chapter by just congratulating Cage for producing this very wide-ranging report which touches on a number of really important policy questions. I think it's really welcome that academics like those at Cage are trying to synthesise their research and draw out the policy lessons for policymakers, because it is really important that policy is informed by good quality evidence, but politicians and civil servants can't be experts in all areas, and so it actually is really important that academics do take the time, if possible, to synthesise and put out their messages in this really kind of accessible format. So it's really welcome. Very well done to Cage for doing that. One of the costs of the intense focus we've had on Brexit over the last 2 years is that other important policy questions that probably should have been coming to the fore have not really been so prominent. And in particular, I'm thinking about the question of what scope and quality of public services and welfare system we want to have in this country, particularly in the face of an ageing population. Who should pay for that and how, through the tax system or through other direct payments? And not unrelated, the question of how we can try and boost really quite persistently sluggish productivity growth in the UK that might ease some of these trade-offs between the costs and benefits of public services. And it's really welcome that this report, in many of the chapters, covers many of those issues, going beyond, as Arun said, the sort of immediate focus on how and when the UK is going to leave the European Union. But one of the things that the Brexit vote did do was to shine a light on some of the inequalities and discontent with public policy that had probably been simmering under the surface but had been probably ignored for too long. And one of those issues was the degree of regional differences across the UK, which is obviously one of the things that Roland's paper touches on. And I think there's an interesting kind of question or tension in public policy as it relates to regional policy about whether do we care about places or do we care about people who live in places. And that was one of the things that actually was quite interesting in the sort of messages from Roland's work, is this question of, is it that job seekers aren't mobile enough, that policy needs to focus on getting people to where the jobs are, or do we need to encourage employers to go to the parts of the country where there are unemployed people looking for jobs? I think potentially the answer is probably both of those, but it might be interesting if Roland could reflect on that later on. The other thing that is interesting across a number of the chapters, and including in the work that Roland's done, is the extent to which we can learn from looking at the UK in international comparison. And I think it's interesting to learn both from what is similar for the UK and other countries and actually what is different. And in this case, actually, it's interesting to look at the differences between the US, which Roland's work was really focusing on, and the UK experience in recent years. So in the US, the puzzle post-crisis was the jobless recovery. Why the economy grew, but there were no jobs. In the UK, it's almost the reverse question. We had lots of jobs, but it was almost a wage growthless recovery. And I wonder, as a sort of question for future research for Roland, whether this mismatch also is an explanation for the UK, but in a different way. So perhaps people are finding jobs, but they're not getting the right match for their skills. And that's why we're seeing poor wage growth. Just interesting question. Don't know the answer to that. The other area, I think, in the report that was interesting looking at the international differences is one of the clear narratives in the US is the extent to which rising inequality over the recent decades has led to social discontent and many of the sort of the vote for Trump and those issues. If you look at the UK and many parts of Europe, actually, we haven't seen a particular rise in income inequality in the UK in recent years, which for me raises the question of whether actually it's been the slow growth in all incomes that's been the real issue, and therefore focuses attention on the importance of trying to boost productivity growth across the economy so that there is just more money to go around, as well as worrying about who is getting the money that there is. And finally, what was the other? Oh yes, the other thing that I thought was very interesting from a slightly personal perspective was one of the papers which talks about the role of incentives for people to acquire certain skills that are needed, and particularly focusing on the lack of STEM skills in the UK, and that employers constantly ask for these skills and yet people don't choose to do them, or once they've acquired them they go into financial services rather than becoming engineers. And I think again, the international comparisons there are really interesting. So if you look at Germany, a country where historically those engineering skills have been, certainly my impression, is much more socially highly valued. Actually, there is many more people go into those areas of research and work rather than going into financial services, which we have in the UK. So I think it's, again, interesting what we can learn from international comparisons there. The final thing, and really very much straying off Roland's presentation that I thought was quite interesting coming out of a number of the chapters, was the importance of the quality of policy making, not just how much money you're spending. And clearly for the UK going forwards, we have huge pressures to spend more money on the healthcare system, more money on pensions, more money on social care, and not a lot currently of willingness to talk about tax rises, which really does mean that the pressure to do as best as we can with the money that we do have is going to be really important. So I thought it was interesting, Vera's other paper that she didn't discuss just now, looking at the relationship across Europe between the size of welfare states and the quality of outcomes that are achieved, and showing that there's not such a strong relationship there. So it really matters how you spend the money, not just how much you are spending. And the message that came out of the papers by Arun and by Helen Miller about the importance of thinking about packages of policies rather than just worrying about individual areas in isolation. So, for example, Arun's paper focusing on the fact that you couldn't achieve reductions in carbon emissions by targeting taxes on carbon emissions, but at the same time compensate those low-income households that might be affected by the high cost of fuel. If you think about those packages together, you can actually achieve better outcomes than you could by looking at all these things in isolation. So I'll stop there.
Thank you very much. And so now this is the point of the evening where we turn over to you to ask questions. There'll be a couple of mics roving around, and I'll collect together a few questions at a time, and then we'll ask the panel to touch on them. Right.
I have a question on tax. In the chapter by Helen Miller, she mentions income tax, national insurance contributions, and VAT. But in the recent book by Paul Collier, For the Future of Capitalism, he thinks we should be looking at taxing the benefits of agglomeration in big cities. And this leads him to suggest taxes on property, in particular, and also taxes on metropolitan earnings. So we go for, living in London, you'll get hit with these taxes. I wonder why there hasn't been more emphasis on taxation of property in the report.
And another question?
Good evening. Thank you very much for the interesting talks. As our headline is Which Way Now, I think, or words very close to that, it seems perhaps sensible at this point to reflect on what we've learned from Brexit as analysts and potential policymakers, and how we're going to build on that knowledge for the next 50 or 100 years. So I'd be interested to know what our distinguished panel think we've learned in a constructive way, analytically, that will help us for the next half century or so. I think I've learned two things, if that's useful to anyone. First of all, we now know that about 6 to 8% of people, I lost this mic.
Barely.
6 to 8% of people, disgruntled citizens in our country, will not answer surveys. And that's it seems to me a very important thing to discover. And this is why the bookies and the markets got things fundamentally wrong. How are we going to adjust for that in the future? Well, I still lost my. And second, in some of the work we've been involved in here, an absolute key predictor of who voted for Brexit was people's financial feelings. A much stronger predictor than their actual income. A sense of discontent with their financial feelings. It's not clear how Brexit will fix that, and we barely measure financial feelings in a systematic way in government statistics. Those are my thoughts, but I welcome them.
And there's one more question right behind there not a question? No. Okay, let's take those two at the start. I should say, by the way, that Andrew is a distinguished contributor to this report among other members who are here and has a chapter on this particular issue that he was raising. So who wants to tackle the issue of tax and whether we should be taxing property rather than individual transactions?
I can have a go. It's certainly in the political ether, Marcus, and I think Paul Collier's book on the future of capitalism is fabulous, and any undergraduates here, you should read it. It's a wonderful synthesis of economics and sort of geopolitical analysis, and it's an example of what very distinguished academics can do when they write for a broad audience. I think it's an excellent book. It's definitely in the air to tax property. I think it's almost the third rail of British politics is to leave the gains from people's principal residence alone. I don't think any government will be elected in my lifetime that messes with that, particularly when property prices are in many parts of the country so high, an average multiple now 8 times average earnings. It was just 3 times as recently as the late 90s. That touches on something that Gemma said. I just wanted to mark. There hasn't been much of a rise in income inequality, you're right. And I know that's right because I read it often in my Financial Times because Chris Giles is obsessed with it. But there has been a big rise in wealth inequality, and that's particularly through property wealth and pension wealth, which has affected the generation that many of you are in this part of the hall particularly badly. I personally think that's very closely linked to quantitative easing. This is a document about policy making since the crisis. One of the major things that future historians will look at is the, in my view, distributive impact of quantitative easing. I think it explains a lot of the discontent that we have across the Western world at the moment. So what is going to happen? I think what we're going to see is not quite a Georgist system, not like a sort of land value tax, which Milton Friedman said was the worst possible tax except for all the others. I think we're going to see people that sell land, farmers that sell land, having to share the planning gains with local authorities. I think that's almost a cert now. Both major parties are looking at that very, very closely. I think we're going to see those. So what do I mean? What I mean is when somebody sells land to a developer, usually the developer then gets the planning permission and enjoys a 20, 30, 40, 100-fold increase in the value of the land. And then the eventual purchaser of the property pays for that through a mortgage that's much higher than it otherwise would be for the rest of their often working life. I think those gains are going to be shared, and I think they're going to be hypothecated, and I think they're going to be kept at the local level to pay for local infrastructure. So the argument about building and developing, building more houses, the houses that we need to make normalise property prices in this country, then go into the local infrastructure and make local development more popular. So I think you've characteristically, Marcus, put your finger on something very important, and I do think there'll be a lot more property taxation, and I think it will fall not on the householder or the owner of a new home, it will fall on the people selling the land, and developers will make a lot less money than they previously have.
Thank you. And then on Brexit, do you want to start off?
Yeah, I can try and have a few thoughts maybe about it. So I think Gemma already alluded to a few things that have been synthesized by the Brexit vote specifically. And I think so, and I'm writing this in the introduction as well, that basically there was kind of a consensus of New Labour, post-Thatcher consensus on kind of growth-promoting policies. And I'm quoting this famous Mendelssohn quote who says, "I'm intensely relaxed about people getting filthy rich as long as they pay their taxes." And then by 2012, he basically says he's not so relaxed anymore because, of course, it's, yes, there were growth-promoting policies, but of course, through globalization, integration, market integration, and so on. And that, of course, as we know, generates winners and losers. And I guess really what we have learned is that we need to think about, or policy and politics need to think about how to compensate the losers from these growth-promoting policies.
And Gemma?
I mean, just on an, I guess, entirely different sort of lesson from Brexit, I think one thing we did learn was the importance of the information that people have available to them. And what they are told is our truth. And clearly we saw a lot of misinformation around the Brexit campaign. I thought it was very interesting, the paper in this report where Helen Miller talks about the impact on people's opinions if you frame information differently to them. And so I think one thing that's quite an important lesson for researchers going forward is to think about your role in informing the public debate and making people aware of what true facts are and how you present those to people in a way that they can understand.
Should we try and take a couple of more questions? I'm conscious that we haven't had any questions from women. Just as a thing to throw out there.
Yeah, so going back to the redistribution point, like, I don't know if the panel wants to touch upon universal basic income, because I think that's not been touched upon. And along with that, the taxation point, because there's a lot of discussion in the US right now regarding higher capital gains tax and everything. And so basically, do we think that UBI would be needed over time? And if that were to, how do we think about it fiscally?
About the maternity pay and maternity leave. I was just wondering whether you had any information on how many women actually took the full leave, because it might act as a safety net, but if you are so conscious about your career, you might just cut short and go back, or even work from home.
So I guess we should just...
Oh yeah, I can just respond to this very quickly, yeah. So what we did is we have a large-scale survey of all female academics in this country. So we have, we surveyed all of them. We have 10,000 observations. And so yes, we know exactly how much everyone took when they had a child. So we asked them specifically, did you take all of the fully paid leave? Did you take some of the, or all of the partially paid leave? And what comes out is that everybody always takes all of the fully paid leave, right? Whether this is 4 weeks or 26 weeks doesn't make a difference, right? But there's a lot of variation whether women take some of the partially paid and especially unpaid leave, right? And there you have really this length and generosity trade-off, and you see this in the outcomes, right? So women who so for example, partners' involvement or access to childcare makes a huge difference whether women actually take also unpaid leave or how much the partner earns, these kind of things, right? But in terms of variation, uptake of fully paid leave, there's no variation. So everybody takes the fully paid leave if they are eligible for it.
And then who wants to talk about universal basic income?
I'm not mic'd up, so I'm going to shout. Oh, thank you. Well, although we disagree with Liam on lots of things, we seem to be sharing a mic, so this is very nice. Yes. Mainly on Brexit, the rest is fine. But it's just on the property taxation one. The interesting thing about the Paul Collier book is that, of course, he wanted a redistribution from the metropolitan areas to others, whereas your idea on the development tax would stay inside the area, and they both have merits. But of course, I had gone to a number of his book launches, and what people were worried about is the fact that actually London already and some of those subsidize hugely the rest of the economy. And what would you do? Are you actually causing lots of distortions that way? and where you're basically trying to encourage perhaps other areas to do slightly better that way, but you're losing out quite a lot because of what you do to London. And the interesting thing, of course, in terms of regional development, which was touched by Gemma as well, is that unfortunately the coalition government, when it came to power in 2010, just got rid of the regional development agencies and actually also cut the amount of money that was going to regions. It's trying to make up for it now a little bit, but the damage has been done. And that's a serious problem in terms of equality across, if you're looking at it that way. So that's one of the policy... it's actually going to be harder because of Brexit if you're just thinking about the implications of this. If indeed you're not going to be growing as fast and the money's in there, and you need to fix so much more, such as the National Health Service and everything else, from a slightly lower base, but with already a lot more debt than you thought you might have had otherwise. So that's one of the issues. But on property taxation more generally, it's interesting when you look at OECD comparisons that the UK at present, of course, if you calculate council tax and also inheritance tax and capital gains tax on second homes and all that sort of stuff, actually pays more if you look at this as a percentage of income, so the equivalent, if you like, of GDP. So if you look at it as what it amounts for in relation to the size of your economy, it's the highest, I think, in the OECD. So you've got to just watch it. But it is entirely possible that we're not doing it right. So that the composition of that type of property tax may actually need to be rethought. And but politically, I think I agree there, William. Taxing, wealth taxes just don't go down particularly well. But capital gains tax certainly could be changed. And of course, right now, we still encourage, I think we still need to encourage entrepreneurs, of course. But at present, there is a discrepancy in terms of those taxes, and that needs to be rethought. And also what we charge, how we tax firms generally, whether it's corporation tax, or whether it's the new way of trying to capture some of the digital stuff. So I think there is a lot of rethink that needs to be done. And I think what I did, because I was also involved in the London launch of this, is that the Treasury with its tax policies can just do them without the necessary cost-benefit analysis, long-term rethinking. It just plays around with taxation. And I think there needs to be a complete rethink of how taxation is done, and maybe Brexit will give us the opportunity to do that, if you like, since we're going to have this spending review happening. But also, I think the Treasury should be subjected to that type of scrutiny like everybody else, and maybe we'll get the right tax regime emerging, who knows.
Finally, subjecting the Treasury to scrutiny sounds like a very good idea to me. Can I take some more questions? I see one. At the back.
So Gemma mentioned about STEM students staying in STEM in countries such as Germany rather than in the UK in terms of where they go post-university. What do you think that Germany is doing differently to the UK, and how can we fix this?
Thanks for a really interesting and broad-ranging discussion. I just want to pick up on the gender point. This becomes incredibly narrow very quickly, and you've obviously looked at gender in academia, but gender in economics is a big issue for discussion in the GES at the moment, and GES, Government Economic Services, doing good things to promote that. But it prompted a discussion in my organisation, which is Ofwat, which is quite a small organisation, a civil service, but we have quite a large proportion of economists, about diversity more generally and what you can get out of it and what the benefits for the organisation are, rather than just the kind of from the individual's perspective. And one of the things that we really thought was important about it was the different perspectives and different ways of thinking you get from diversity in general. But we actually do reasonably well on the gender diversity. But the thing that we picked up as being more of an issue was socio-economic diversity within economists in particular. It seems to be something which attracts white middle-class people more than any other group. And I just wanted to know if there was any thoughts you had about how we could do better in that as a profession.
Is there one more I can collect at the same time?
Hello, thank you for the presentation. My question is regarding maternity leave. You showed data on how different universities in UK offer different maternity leaves, and there is quite a bit of difference among the weeks offered. So do you think there could be a common policy for academic institutions such that you offer the same maternity leave across all institutions? Like something like Indian government is done last year, is passed a resolution regarding minimum amount of maternity leave that is supposed to be given to female workforce. So do you think maybe some common policy regarding across all institutions and maybe the corporate sector would benefit women? Thank you.
Okay, so Vera and then I guess Vicky on both whether we should increase the generosity of the common policies that we have in the country and also on diversity more generally beyond just the gender issue.
All right, so one of the things that we are finding is that limited but generous maternity leave is beneficial for career paths, right? So, so what I said in my last slide was basically, you know, the statutory provisions in this country are very, very limited, and that's why the legal provisions externalize the costs to companies, basically, right? Or to parents if the companies do not provide for good maternity provisions. And so what we are looking at is so-called occupational maternity benefits, and of course that is within the realm of the institution. They decide on their maternity benefits that are on top of the legal entitlements. If we believe that there are positive attributes and positive outcomes generated by more generous maternity benefits, of course, then we have to push policymakers to actually increase the generosity, because it is impossible for the policymaker to impose on a privately owned firm saying, but you need to pay for 12 months or you need to pay for 6 months. So that is not possible. So the legal benefits could be increased and homogenized, so to say, but so you can impose length, but you cannot impose generosity. And I think, yes, I agree. We will be doing more research and see whether this has, you know, across different sectors, positive impacts. But if we find that, then this would clearly be a policy recommendation to increase generosity without increasing length necessarily. Just quickly when it comes to diversity, I think that's a very good point that we talk a lot about gender diversity at the moment with the Me Too movement and everything. And we forget a little bit about ethnic diversity, for example, socioeconomic diversity, and so on. So the one thing that I have learned from the gender side of things when talking to HR people in large companies and so on is that they have acknowledged the benefits, and there is research on this, the benefits of diversity for not just for outcomes for individuals, but for productivity, for firm outcomes, and so on. So for example, when you look at design teams at Jaguar Land Rover, that's one thing I know, for example, they basically have these very well-designed maternity benefits because they understand that they want to keep these highly productive women in these teams, because these teams that are more diverse produce better outcomes, right? And so clearly that diversity produces better outcomes, not just from the gender perspective, but also from other perspectives is true. So then so we have heard before that also in the gender aspect, you have to change the culture, the environment. This has to be more accepted. And I guess the same holds true for other types of diversity. From my perspective, from my research, of course, it's easier to say, okay, just pay more weeks of full salary replacement to mothers and they will come back to your company, right? But how to do that on other dimensions of diversity is a little bit more tricky, right? And I fully agree that we need to think about it, but I cannot offer a solution right here off the top of my head.
I can just add that what I said before is that the way in which you can get that cultural change is by actually imposing quotas for private firms, particular sectors, in terms of what they should be achieving in terms of senior levels. And that encourages the culture to change, including needing to do something about maternity pay. It takes a bit of time, but I can't see it just happening on its own, because actually the changes that have taken place have been so incredibly slow. And we still have very, very few women, as we found with the pay reviews, in senior positions anywhere. I'm afraid this is also the case for academia. The issue of encouraging people from different socioeconomic background to apply and be economists, I mean, that's a really interesting and very, very difficult one. I mean, I'm afraid it isn't just the GS thing that's the issue. It's schooling, but also, I think up to a point, it could also be GS hiring. It could be what you do when you go to various schools and encourage people to do various things. It could be when you go to universities and encourage them to get their students to apply for this. In fact, I remember coming to Warwick with my team and saying, well, actually, you're producing too many sort of mathematically oriented economists and we can't really use them for economic policy. Can you not do something different? But I think it needs perhaps a slightly wider attitude when we're looking at people that we want to recruit, and perhaps look at encouraging the profession to be taken up by students from different backgrounds and working with schools. But what you find is that that sort of thing does have an impact. We had also done some work looking at the impact on people wanting to be entrepreneurial and start their own company or something, which of course entrepreneurship being a very important part of productivity, we thought this needed to be encouraged. So we started a whole thing when I was working for the DTI of business education. So businesses would go in and tell them how important it was, and of course to become, to be useful for them, you may have had to do other STEM things that we talked about, or perhaps do something on business, and this question on STEM needs to be addressed by us as well. And what we found is that when businesses were going in to teach or to explain what they were doing and how important enterprise was and all that sort of stuff, we found that certainly boys were twice as willing then or keen to start their own business and go into enterprise. Girls were 4 times as likely to want to start their own business, which is quite interesting. That what of course you needed to make sure is that it wasn't hairdressers, but it was something really more substantial, which put them up. It's nothing wrong with hairdressers, but put them up a career path and earn them more. So I think that there has to be partnership in this. And so what we actually tended to do, the interesting thing is, because the lady who talked about India spoke about it, as you probably know, but certainly at the DTI and elsewhere, we had a wide range of women and also ethnic minorities coming, unfortunately, from elsewhere. So we had lots of German women who were economists and so on. So it was completely not discriminated. So I don't know what's going to happen after Brexit. But so we got the variety, if you like. But of course, all the people who came from abroad and were able to work at the level we wanted them to were also of the higher socioeconomic group. So it takes time, and it's a very, very important issue.
Then to Gemma and then to Liam.
After you, Gemma.
So just on the question of gender and economics, it's a question quite close to my heart. It was actually the final article I wrote for the Financial Times was where are all the female economists? So I did quite a bit of looking at the evidence. And my kind of conclusion was that the problem with women in economics, and it's the same with the socioeconomic diversity in economics, is that it really starts at the very earliest stage. So people just don't choose to study economics at A-level and then they don't go into university, and so it's that as much as the sort of leaky pipe later down the career path that is the problem. So I kind of agree with Vicky that a big part of the question is how do we engage with people at that very earliest stage to convince people that economics is a subject that they should be interested in studying. I mean, in the research that I did, kind of a lot of face-to-face talking to students in schools and looking at the academic evidence, I mean, it seems to be in part at least a kind of misperception of what economists are. So a lot of the people who are quoted in the media, people you see on TV as economists, are kind of old white men in suits talking about the macro forecast and financial markets. Seems to be the sort of public perception of what economists are, and there's sort of less awareness of many of the other areas that, by revealed preference, girls who do study economics tend to find more interesting. So the sort of education policy, other areas of social policy and microeconomics are perhaps less prominent as being what economics is in the public debate. On the specific question of the socioeconomic diversity, there's some quite interesting evidence put together by Sarah Smith and Claire Crawford for the Royal Economics Society, which is available on their website, very difficult to find. but which looked at, in particular, the degree to which people in poorer socioeconomic groups were actually offered economics at school. Now, obviously, economics A-level isn't actually a prerequisite for most economics courses, but the evidence is that people are much more likely to study economics at university if they've done it at school. And they found that there was a massive difference. Something like 98% of boys in single-sex private schools are offered the chance to study economics A-level, compared to something like 55%, I think, of girls in single-sex state schools. So at least one part of the answer seems to be that actually people just aren't given the opportunity to study it at an early age. So that's one question. I think the only specialist training course for economics teachers in the UK shut down last year, I think. So there's actually now no specialist training programme for school economics teachers left, which is a bit worrying, because presumably if you're not a specialist economics teacher, you probably can't sort of get across the interest of the subject to the people that you're teaching. In terms of what you can do about it, some really interesting kind of experimentation going on in different places. So in the US, they're sort of experimenting at university level, because obviously for them they can attract people in at that stage before people make their major choice. One that kind of amused me was one of the US colleges experimented or looked at the fact that among people who take introductory economics courses, amongst the boys who take it, their decision about whether to go on to the intermediate economics course was almost invariant to what grade they got on the course. So whether they got a B or an A+, they were just as likely to carry on. In contrast, for the girls on the course, if they got less than an A-, they're much less likely to choose to do economics and instead went on to other subjects. That wouldn't be a massive problem if all subjects graded similarly, but the sort of notoriously economics is quite harshly graded, and therefore girls are put off from doing it at that stage. They kind of experimented with giving girls some different messages about, well done, this is a really difficult subject, you've actually done better than the average, even though you only got a B+. Little things like that can make a difference.
I just wanted to pick up, I will talk about diversity, it's a subject close to my heart too. Just on the basic income though, because nobody's managed to, and I'm just going to touch on it. I'm actually on the fence about this, uncharacteristically. As an undergrad, I read James Mead, Agatha Topia, basic income models, was very taken with them. More recently, I've read books by people like Guy Standing talking about basic income. On the other hand, I worry about the extent to which it would dull incentives. I worry to the extent to which it would blow up the fiscal accounts and open the door to rather more, to my mind, insidious ideas that just make no economic sense, like people's QE and so on, which history have shown just don't work. I thought we'd have learned that lesson by now, but apparently not. And also I see a lot of the people promoting the idea of a basic income tend to be the sort of titans from the tech giants, as if everybody's got a basic income, we can have very, very concentrated companies that bestride the world and no one needs to worry about capitalism actually working because the plebs will just be given a basic income. So I applaud where it's coming from, and I'm not completely against it, and that's why I just wanted to pick up on your question. But I think I'm against it. And then on diversity, again, women in economics, it's very much in the ether. 2 or 3 years ago, Vicky and I spoke at a Women in Economics seminar at Cambridge. The hosting professor had a close on that time, which my partner actually organised for her. She works at Key's College, Cambridge. Certainly a lot of the letters I get from members of the public, students and people at school about the economics that I do on television and in the newspapers and so on, I think they're disproportionately from, I think, young women, but maybe that's for a different reason, I don't know. But anyway, joking aside, and that wasn't actually a joke, I do see a lot of interest in economics from school age and student women, far more actually than just 2 or 3 years ago. So that's not a completely flippant point at all. I do think there's something in the pipeline, if you like, about diversity. I guess what I know about professionally, apart from asset management to an extent, the newsrooms of this country. I spend a lot of my time in television and newspaper newsrooms, often as the only economist there, the only economist who's ever been there, in terms of people with advanced degrees in economics. And we are doing well, actually, on diversity in terms of gender, and we are doing well in terms of diversity in terms of ethnicity, in the sense that both are improving as a way to go. But in my view, we're going backwards in terms of diversity in socio-economic range of people who are making decisions in our newsrooms, who are writing signed columns, who are appearing on television. And that coincides, and this is where I wanted to bring in Professor Andrew Oswald's point. We're losing, as a sort of researchers and potential policymakers, as you put, of a feel. We're losing our feel for ordinary people, our thinking and feeling. And that, Vicky and I are at one on that. That partly drove the Brexit vote, because people didn't feel they were being represented in the national conversation, national policy making, politics more generally. We have a lot of people at the top of journalism who really don't understand how ordinary people live. We have a lot of people in Parliament who have come into Parliament through being, advanced degrees at posh universities, becoming special advisors, and then going straight in as MPs. And if you have a sort of the tripod on which policy is built, we have MPs, don't we? We have the newspapers and media more generally who are informing and are informed by those MPs. And then we have the people in this room, people who have no axe to grind, who are just smart and trying to do their best to put forward good policy that can fix problems that need to be fixed, knowing that there are problems that need to be fixed. And that's why it's absolutely vital, even more vital than normal, that our academia is socio-economically representative. And I'm afraid it isn't. That's where I think there is real work to do. There is real work to do. I applaud efforts to increase gender equality and the representativeness of ethnic minorities in this country, who have often had a hard time. But I think above all, the imperative here is to work hard to improve our socio-economic diversity, which I'm afraid, ladies and gentlemen, in my generation has gone backwards.
Well, lots of food for thought there. I think since we're over time, we will have to continue the conversation.
The STEM thing for Germany, but never mind.
I was aware, but given that we're over time, what I will do is to wrap up here to say thank you all for coming. I hope we've given you some food for thought and that you've learned some things from what's been presented here. The report is really worth a read. It's got a lot more in it than just the 3 chapters we could provide here, and there are copies over there that you can take away. But I urge you to dip into it and to look at kind of the wealth of research that we're producing here at Cage, and also indeed to look back at some of the older policy reports that cover other areas that we haven't been able to talk about in this report. So thank you all for coming. Thank you to the contributors and to the panelists, and there are drinks.